But Scott Bauer, Prosper Trading Academy. Usually when I think of the VIX showing real volatility, it's somewhere above 20. So the last time we spoke, it was certainly a little bit lower. But do you have anything to worry about here with the VIX at 17?
No, I don't really think so, Abigail. And as you said, last time we spoke, we were talking about 13, 14. So VIX and volatility in general is much higher than it was just even, a few weeks ago, a month ago or so. However, if you're going to focus in on the S&Ps and then on the VIX, two things. Number one, in the S&Ps, there has been a big flip-flop of open interest and of option volume from a month or two ago, where we saw big call volume far out exceeding put volume. That's now flip-flop over the last 2 weeks or so, where we're now seeing much heavier put volume. That being said, though, I really believe this is, investors, institutions just coming in. They missed the bottom in volatility, and they're just trying to protect some portfolios here. Now, talk about the VIX. The VIX came up right to its 200-day moving average on Friday, could not break through. It has not been through there since much earlier in the year. I'm not saying that, this VIX being elevated from where we were isn't maybe a little bit of cause for concern. However, if you look at the VIX futures curve, we're in a state of normalcy, if you will, and that's called contango, meaning that the futures prices are higher the further you go out.
Right.
When we get, when there's some panic and fear in the marketplace, all of a sudden you see that reverse, and you see a situation called backwardation, where the front or near term gets more expensive. We're not seeing that.
Well, I'd really like to ask you a little bit more about that, because when we're taking a look at this chart here, which does show the VIX trying to make it above that 200-day moving average. And I would suggest that the month of August, we have this set of higher lows. There appears to be a bottoming pattern. I would not be surprised at all to see the VIX at some point over the next week or two quickly go to 25, maybe even higher. And yet, when I look at that VIX curve, the same thing. Not only that, but the highest level projected through, I think, November or December is 18. So lots of different signals. Plus, you're saying these S&P 500 put buyers, it's simply hedging and not outright bearishness. Put all this together for us, Scott.
Sure. So, we were, so used to seeing the VIX in the mid-high 20s, even the 30 handle for such, the longest time. And that has been halved, literally. I think that, obviously with Jackson Hole coming up, we're going to see vol increase as the week increases here.
Yep.
Now, whether that's due to maybe a NVIDIA print that is not what the street is looking for, or some of the other earnings that we're going to get, that could be a separate issue. I do think we'll see it increase, but once that's finished, I don't care what Powell says, whether he's hawkish, dovish, whatever message he delivers, I still think we go back into this kind of sideways trade up until that meeting in September.
So you see the possibility of a spike higher for the VIX, but it's unlikely to last. And then very quickly, Scott, we do have a nice rally on our hands. The S&P 500 up 0.7%, the best day in more than a week. Did options expiration on Friday? I know sometimes it clears the decks for the trend to change again.
Big time.
Do you think that could be the case, even if we do see a little bit of vol going into Friday?
Absolutely, Abigail, because that options expiration was heavily weighted on the put side. There were a lot of institutions out there holding S&P puts, VIX calls, and those are expired now. Or the VIX ones, actually, it will expire this Wednesday, but the S&P puts have expired already. So I do think that there is a somewhat of an all clear, a very short time frame, somewhat of an all clear after expiration from last Friday.
Great perspective, and the stock bulls today would certainly seem to agree with you. Scott Bauer, Prosper Trading Academy, thank you for joining us for Options Insight today.
Thank
from
you.
New York, this is Bloomberg.